So what's the first big landmine that causes a lot of people to lose money when they are investing in a syndication deal? Here's the thing. If you're listening to somebody pitch the syndication and they have to tell you how the debt structure that they're using is some exotic form of debt, and it's going to be this piece over here, we're going to have a bank come in for 10% here, and then we're going to have another bank come in for 50% here, then we're going to raise money from investors. This is an exotic debt structure, and you should run from it. The second thing is if they take any kind of bridge loan for any reason. Now, this might be a little bit controversial. I know there are people out there that say bridge loans have their use and they can lead to maximizing profits. If you look at the people that run into problems and have to do capital calls, I would say more than 80% of them come from people who take bridge loans. Especially right now. If you look at 2021 and 2022, there were a lot of big syndicators taking bridge loans because it got an extra 2 or 3% return. Well, that looks good on the investor sheet. What happens when you get to the end and you can't refinance out? You have to sell and you lose all of that profit anyway. So don't fall prey to this. If they have to get really complicated in their explanation of debt structure, or if they're taking on bridge loans to make the project work, know that it is not a good fit. And this is landmine number one. If you want to see some people who have done this, I'm going to put some links to some articles down below so that you can see the actual deals where people have had this fall apart. The questions that you want to ask when you're on the syndicator call are, what kind of debt do you have? For multifamily properties, 7 to 10 years is considered long term. You want to make sure that it is a locked interest rate. Now, something that is a minute detail, but you might want to ask about is when they make the offer, they can pay a fee. Sometimes it's $10,000 to maybe $40,000 to lock in the rate. So if they have not closed on the property yet, which most people doing a syndication won't, you want to ask, do you have the rate locked in, or will this change by the time we close? It's a good question to show that you know what you're talking about. So landmine number one that you want to avoid is any kind of exotic debt or any bridge loans. You want to make sure that it is long-term fixed rate debt, which is 7 to 10 years minimum.